Let's talk about the housing crash deep dive that we did yesterday with Logan Mohtashami from Housing Wire. We could talk about gold's supposed record high. Is it true? Is it not? We can talk about Tesla and Apple having a China problem. We can talk about some questions I got about Jason and Jen's Pritchard leading off the Vegas event. We could talk about the Fed. And lastly, the craziest story I heard yesterday. Folks, let's actually start with that one first. Yesterday, on the Daily Financial News, I asked all of you to show me you were watching your market in your buy box. And folks, you did not disappoint. You listed out what you're seeing, inventory, price points, pendings, all of those good things. I was thoroughly impressed with the activity in comments, so shout out to you. A lot of you listed in the details some things that you were seeing on the ground, and the craziest story I heard came from the Silicon Valley, specifically the city of Fremont. Folks, check this out. In Fremont, California, there was a house listed a week ago. It got 50 offers. It ended up going into contract at 400 grand over list price. 400 grand over list price. Folks, this was a house price below the median. It was not artificially marketed low. It was clean. It was in the right location. But wow, 400 grand. All I can say about the Bay Area real estate market is there is a lot of stock wealth. Think about NVIDIA. Think about NVIDIA alone. If I read some articles correctly, NVIDIA has added $1 trillion in market cap in record time. Now, even if the employees own 0.5% of that, or a quarter, a tenth of that, that is a lot of RSU money in an environment where there is very little active listings. So you are getting some very liquid individuals competing in the Bay Area housing market. So again, these stories continue across the country. Keep doing the work. Keep looking at your buy box. I was very proud and excited by all of your feedback. Let's switch gears to the housing crash deep dive. I want to shout out one of our loyal followers, Jen, who helped us set up a discussion with Logan Mohtashami from Housing Wire. And folks, we went deep. I did my best to highlight every crash scenario that I have heard, from silver tsunami, from foreclosures, distressed inventory, price to income. We went deep. And Logan was obviously the man for the challenge. And he really laid out all of the faulty logic, incomplete logic, lies that the crash bros and doomers are saying. If you haven't yet to see the interview with Logan, you are missing out, because again, we tackle each and every one. And hopefully you take from that conversation with Logan a new framework. I thought the thing that Logan did very well, some of you may need to watch it a couple of times, but he actually gave you the logic about how to attack or how to follow what is truly going on. It was a wonderful conversation. It was not the chaotic back and forth that Logan had with George Gammon from a couple weeks ago that I was disappointed in. This one, we got Logan talking and we let Logan go. The other thing that we found out from Logan, I've seen some comments. Some of you out there have been believing the bait that doomers put out there. Some of you have said, hey, Logan is bought and paid for. Logan must be part of the establishment. He must be some big investor who's got, he's in some syndications that are blowing up and he's begging for lower rates. Folks, not true. He is just a data nerd who loves to look at macro stuff and go forward. He does own one rental in Orange County, California, free and clear. He has no debt. So he is not talking his book. I've seen multiple comments saying that he is bought and paid for, and that is not true based on the conversation I had with him. So again, do yourself a favor, watch that, probably watch that a couple of times, especially if you are watching different parts of the market and you are believing some of the nonsense. I think we did a good job of talking about all of them. Alrighty, folks, let's talk about gold. We talked about Bitcoin yesterday. It looks like Bitcoin hit 69K today. We will move on to gold. And I have to tell you, one of the things that annoys me about experts in housing, in gold, in Bitcoin, in other areas, is when they throw stones at another investing vehicle and then fail to be intellectually honest about what they care about. Let me give you a for example. Undoubtedly, there are lots of gold bugs. Peter Schiff, probably the most well-known gold bug. He sent out a tweet yesterday saying the market is missing it. Gold has hit an all-time high at $2,100 an ounce, which again, factually correct. However, what is one of the feedback that Peter Schiff has said for a long time? Don't look at nominal, look at real, right? Look at inflation adjusted. So I ask you, has gold hit an all-time high inflation adjusted? And the answer, Mr. Peter Schiff, is not even close. If you go back and you do a inflation adjusted value of gold, gold hit a peak in 1980. The inflation adjusted or real value of gold in 1980 would have been $3,200. So Mr. Peter Schiff, gold is down 40% if you do what you suggest others do. So again, it is factually correct to say gold hit $21 an ounce. It is also factually correct to say that gold is down 40% in real terms from 1980. You can't make this stuff up, Peter. You got to be a little more intellectually honest. Let's go and talk about Tesla and Apple. I don't know if you've seen this in the last 48 hours, but Tesla came out, I believe, yesterday talking about deliveries in China being down. They've initiated more discounts or pricing war in China. Follow that up to this morning, where Apple is now highlighted that deliveries are down. Let me get the number. Where is it? 24%. 24%. So again, what is going on in China? Is the consumer breaking? Is the consumer anti-American perhaps? These are some very, very large drops, right? Down 24% for iPhones. Are they moving to Chinese brands? Maybe. Is the economy weakening? Maybe. Is the consumer scared and not buying luxury? Maybe. But it is very clear that the Chinese economy is not what it was. And you are seeing some of the largest American brands like Tesla and Apple take it on the chin. Oh, got a question. A lot of you enjoyed that special release or announcement with Jason and Jen Pritchard. That was the opening act, and they really set the stage for our Vegas event. I'm really, really glad you liked it. I'm glad I did that. Some of you have asked, can we have the PowerPoint? Because if you didn't notice, Jason and Jen were speaking to a PowerPoint. They have been gracious enough to give it to me. It is in the course. So again, if you buy the replay at $199, but again, I gave you a $50 discount, so it's only $149. You can watch them on replay and the PowerPoint. You'll have the PowerPoint from not only Jason and Jen, but Lance Lambert in his 48 housing slides. You'll have Dan Bird in all of his stock analysis and more. So it is all there for you, plus 21 amazing bonus podcasts. So again, it is there. It's hard for me to send PowerPoint around. So it's in the course. The coupon code, in case you want, is ORAT, ORAAT, 50K. It stands for ORAT, one rental at a time, 50K. All right, now let's talk about the Fed. As I said, we got a lot of Fed speech this week. Are they going to cut? Are they going to raise? Are they going to be on pause all year? These are things that I'm looking for. So, according to Fed President Raphael Bostic sees one rate cut. Remember, there was a time this year the market was calling for 9, then 6, then 3. Now, Raphael Bostic says 1. And he says 1 in Q3, which I think is interesting. Fed President Tom Barkin, when talking about, Josh, thank you very much for the super chat. Hit the like button. You are amazing for doing that. Thank you. Fed President Tom Barkin, will there be a cut in 2024? We will see. We will see. He is hopeful that inflation continues down. Folks, higher for longer. The market wanting 6 or 9 cuts is wishful thinking. I did take a look at GDP Now and Trueflation. These are the most up-to-date metrics and updated nearly 5 days a week, so daily. Trueflation. Trueflation has rolled over a little bit in the last 2 weeks. It is now saying that inflation is only 1.59%. You can go ahead and go to trueflation.com and check for yourself. Not to be outdone, what about GDP Now? GDP Now, interestingly enough, has had a really hard rollover in the last week. For the longest time, they were forecasting that Q1 GDP growth would be up and around 3 to 3.2. It is now sitting at 2.1. There's been a significant reduction in GDP expectations in the last week. So again, lots of things going on in the market going forward. Other things to kind of note, no rate cuts in 2024 is picking up. This is obviously something that I was talking about potentially as late as last year going forward. Hey, Pat, thank you for the super, what is this, a super like? Thank you very much for that, Pat. That was very nice of you. But there's more and more talk about no rate cuts in 2024. You have to see the logic in that, right? We've got the stock market running at high. We've got Bitcoin at 69. We've got gold at 2,100. We've got GDP estimated at 2. We got inflation at 1.5. Why in the heck would the Fed cut if all of those are true? Lots and lots of stuff to think about, folks. At the end of the day, I appreciate you. Thank you for being a part of the channel. Thank you for allowing me to share with you what I'm reading every morning. I really value each and every one of you. Jen, again, thank you for setting up the interview with Logan. It's amazing that you would do that on top of all the other daily responsibilities I'm sure you have. Folks, have an amazing day. Take care of yourself. Be well. Bye.